Welcome back. My name is Karen Newton. I'm a wealth coach. That's wealth, income, and lifestyle. And I've been sharing with you my journey from borrowing 300 on a credit card to turning it into 10 million in 4 years. Now, the very first video, if you're having a look, you're following this series of videos, my very first video was about putting a plan together. You see, I had tried lots of different things. I've been I've been flitting, if you like, from this to that to something else, and I found that nothing really worked for me. And I wasn't making any progress in building wealth. And I just had this light bulb moment that said, create a plan. And when I created that plan, it really focused my mind. And the results I got from that were really astronomical. I went from borrowing 300 to 10 million in 4 years. So the plan was the basis of making things work for me. So my plan was very simple. I was going to build businesses. I've explained the types of businesses, side hustle businesses that I started. Invest the profits into digital assets. Digital assets at that time was shares. I now do shares and crypto. Buy property, gold and silver. And then I was going to write about everything that I was doing. And by writing those books, they actually then became another side hustle for me and started to build up the income that I was generating so that I had more and more money to actually invest. So today, this session is looking at shares. And I use two strategies. Now, I will say that when you invest in shares, there are lots and lots of different strategies. My whole philosophy is to keep things simple. And the simpler you keep things, the easier it is to build your wealth. Because you're not running around, you're not stressing about things. It's simple, it's managed, and you just literally take your time building your wealth. So, two strategies that I use for shares. Number one is monthly dividend shares. And I'm going to tell you how I use monthly dividend shares and why. Strategy two is penny shares. Now, penny shares is more risky. You do need to manage that a lot more, and it does take a lot more work to run a penny share strategy. But first, let's look at monthly dividend shares. Now, they are actually very, very simple. You don't need to know much about shares. You can do a simple search on Google and you can find out which shares to invest in. For example, if you're watching this in the UK, you can put into Google top performing, give me 5 top performing monthly dividend shares. And they will list 5 shares that pay monthly dividends. And if you go in and you have a look at them, then they will show you some shares to invest in. It is that simple. You do need to open an account. When I started, I used eTrade. Today I use eToro. The reason I use eToro is because I live in Spain, and this is the company or the broker that would let me open shares in Spain. For some reason, Spain does not like you share investing, and so after a bit of a rigmarole, I got an eToro account. But you just put an inquiry into Google. Because I use eToro, I now invest on US shares, and I will put into eToro what are the shares. And one of the ones that I use these days is Main Corporation. Main is, as I'm recording this, the yield is 8.9%. They pay on a monthly basis. They pay a dividend every month, and every quarter they pay 2 dividends. It works out at an 8.9% yield. But this is where monthly dividends are exciting, because if you reinvest your dividend every month into more shares, the yield is actually higher. If you were to sit down and work it out, if you're earning 8.19% yield and you reinvest your dividend every month, your yield will come out around 9 to 10%. Yeah, that is not a bad return simply by putting a regular sum of money into a share and reinvesting the dividend. My whole philosophy was to start with £100. I didn't achieve £100. My very first trade was £1. I built that up as I was building my business up, my side hustle up. I took more and more money, and I built up the amount of money I was putting into shares on a monthly basis. Monthly dividend starts low and grows. Now, one of the best things that you can actually do is reinvest the dividend into the same share that you're buying and allow it to grow. It needs time. The compounding effect takes time. With a dividend around 9 to 10%, roughly every 6 to 7 years, not every, around the 6 to 7 year mark, you will have this switchover. I call it the switchover, where the dividends that you are earning is more than what you're actually putting in. And then you will see your fund accelerate, and the growth is quite phenomenal thereafter. Most people don't have the patience to keep going. Now, my first client, one of my very first clients, I put a tester group together when I became a coach, and I had 5 clients. And the one client said to me, I've invested in the shares, I've got my share account open. And he said, I went and told my wife how much money I've made in my first month, and it was 12 pence. And she said, you've done all this for 12 pence. Today, that is thousands of income coming in every single month, simply because he kept doing it. He got the share, he invested in it, he built one share up, and then he moved to the next one. And he repeated that process again with the next share, and he built that one up. He reinvests the dividends every month, and he has a huge portfolio that is supporting him. But it started with a very small amount of money. And I warn you about that because most people look at that and go, is that all I've got? Why should I continue doing this? But it's that step-by-step process, having the patience, letting it continue to grow, and you will get those results. So with the monthly income, you just pick a share off Google. You ask Google. You don't need to know anything about shares. You just ask Google what's top performing monthly dividend shares, and it will give you a selection of shares. just have a quick look at it and see what the yield is. Have a quick look as well at the percentage that they are paying out in dividend. You need that percentage to be less than 100%. If a company is paying more than 100%, then somewhere along the lines they're going to have to borrow money and they could end up getting into financial difficulty. If they are less than 100%, they are generating money, they're paying the dividend, plus they're retaining some funds. Okay, so that's the only thing you need to check. And as long as that dividend comes in every month, then you can just grow your pot. Now, I will say I am not a financial advisor. I am not giving the financial advice. I am showing you and telling you what I've actually done, okay, and what some of my clients have done. Now, when it comes to penny shares are a bit more complicated because you need to do a lot of research. And my research came back to the knowledge that I had based on my background financially. And so I understood a lot more about reading balance sheets, understanding companies, and I could identify shares where I believed they were undervalued and were most likely to go up. And I took low value shares so that I could buy a lot of them. I use the same strategy today with cryptocurrency. I look at shares, at crypto that has lots of zeros in front of it, and I look to see what they're doing and whether I believe that company can move that crypto price up. So that's the equivalent of penny share investing in crypto or in shares. It does take a lot of management. You do need to monitor it regularly. Your monthly dividend shares, you look at them once a month when you go to reinvest them. And once you've got sufficient money coming in, you can set everything up on auto invest. Okay, and that grows your pot very, very quickly. So that's my strategy for shares. Okay, so what you're looking at is monthly dividend shares, being able to reinvest those dividends every month, have a regular amount of money going in, wait for that switch, be patient and wait for that switch to occur, and then you will see your portfolio accelerate. Have fun investing, and I will talk to you about how I went from 0 to 300, from borrowing 300 to 10 million in just 4 years. See you later.